A little bit more on this this data rather, from RealtyTrac. We bring in Rick Sharga. He is the executive vice president of the company. He's been closely monitoring the foreclosure data since the housing crisis began. He is joining us from Irvine, California this morning. Rick, always glad to have you on. So May's figures showing for the third month, the figures up over 300,000. JP Morgan Chase put out a note saying foreclosures will probably total close to 6.5 million by mid-2011. Prices dropping close to 40%. Is this too pessimistic, or does it sound about right?
Well, we've had in the last 2 years about 3.5 million households in foreclosure, and we'll probably get to over 3 million households in foreclosure this year. So, no, those numbers probably aren't too pessimistic, depending on what their time horizon was. And as the Mortgage Bankers Association said last week, we expect to see the rates continue to go up for the near term anyway.
So that's obviously adding to the pressure. But I mean, is the number one biggest macro figure, macro pressure, unemployment?
Yeah, that's the biggest variable. Most economists we talk to suggest that you'll see one new foreclosure action for every 6 to 10 jobs lost. And when you're talking about unemployment numbers, we're adding 600,000 people a month. That adds up pretty quickly. The other variable is the wave of option ARM loans that's due to reset over the next 18 months, and many of those loans are going to be in trouble when they reset.
I want to ask you, May's number, the third time over 300,000, but we did see a drop, 6%, if you look from April to May, and that's at least what was in your report. Do you think this is reason for any kind of optimism, no matter how slight, or is it just variance in the data?
I don't think it's a reason for any particular optimism. You have to remember, at the end of the month of May, we had a holiday, and that means that local processors probably didn't complete all the filings they would have normally done. The other way to look at this, Deidre, is that over the last 3 months, we've had over 1 million foreclosure filings. To put that in context, the first year we did our report, 2005, the entire year had about 830,000 filings. So the numbers are just mind-boggling no matter how you add them up.
How are foreclosure notices stacking up to actual repossessions of property?
We're seeing the incidence of repossession at probably also an all-time high level. In a normal market, about 20% of the properties that enter foreclosure wind up going back to the banks. And at this point, we're probably over 50%. So of those 3.1 million households that are entering foreclosure this year, probably half of them will ultimately wind up back with the banks.
Rick, I saw in your data as well, the 10 states with the most foreclosure activity make up for 77% of U.S. foreclosure activity. Does that say anything about where we're going, or it just signifies to all of us, okay, this is more of the same?
No, I think there's two things to look at there real quickly. One is that the severity is very concentrated in terms of raw numbers. But the other thing to look at is that we have states like Utah that was number 5 in the survey this month, Idaho that was in the top 10. These are states that don't have huge numbers of foreclosures, but the rate of foreclosure activity is very high. And that's part of the unemployment-related foreclosure that you're starting to see across the country.
And Michigan obviously came in to sort of the higher level of statistics because of the closings, and we're assuming, or 2 bankruptcies are the big 3.
That's not helping, and you're going to see that kind of trickle across the Midwest as well.
All right, Rick, always glad to speak with you. Thanks very much. Rick Sharga there from RealtyTrac.